What do 8% mortgage rates mean for the housing market?
You're definitely going to want to watch this one.
It happened. 8% mortgage rates on a 30-year fix. That's where mortgage rates were coming in towards the end of last week. And we've seen them bounce around a little bit in that 7 7/8 range up into the 8% range. And I'm going to tell you exactly what all that means for the housing market and for folks that are still thinking about moving despite those high rates. And if you get some value out of this, do us a favor, subscribe to the channel, give us a like on the video, or drop a comment so we can make sure you're getting your questions answered. And if you want to schedule a call directly with me and our amazing real estate team, just click on the link in the comments. So we saw rates jump up to 8% last week. I've also got some market data here too. So let me explain to you everything's going on and what this means along with 8% mortgage rates. So what we saw year to date through the month of September in Philadelphia, Chester, Delaware, Montgomery counties is the number of sales are down 22.1 to 26.5% compared to last year. And one of the reasons is because of higher rates. People are locked in. We know that 90% of homeowners have a 6% or less rate right now, so there's less homes coming to the market. That's a very normal reaction. The number of new listings are down 14.4 to 24.3% compared to the end of September last year to the end of September of this year. And we saw median pricing rise 5 to 7.5% in the suburban counties, and median pricing is down 3.7% in Philadelphia. And it shows the difference between the Philadelphia market versus the suburban markets. Days on market in the suburban counties is ranging 19 to 22 days. That's the time it takes from hitting the market to signing a contract. And in Philadelphia, it's a 48 days on market average year to date. Percentage of the asking price received for sellers is ranging 100.4%, so above the asking price, to 102.1% in the suburban counties and 94.7% of the asking price in the city of Philadelphia. And we've seen the supply of homes, it's up 9-10% compared to this time last year. It's ranging 1.3 to 1.54 months in the suburban counties and 4.11 months in the city of Philadelphia. So that means if no other homes came on the market, that's how long it would take for everything to sell. So there is some good news here. The good news is we're seeing inventory rise. The supply is up 9 to 10% year over year. So for folks that are struggling to find homes, yes, rates are higher, that's very clear. You might be able to get the home that you want. So what does all this mean along with 8% rates? What should potential sellers and potential buyers be thinking about? So for sellers, what I'm clear on is this. You're going to see rates jump up and affordability obviously decreases. I'm pretty clear we're going to be in this kind of environment through the rest of the year because we've got at the Fed meeting coming up in 9-10 days from when this video is getting shot, there's a very high chance, over 98%, that the Fed does not increase rates. And for the first time in a long time, we might see a rate decrease. It's very low. This comes from the CME group. It's a 1+% chance that we see a decrease in rates. So a lot of folks, including Lawrence Yun, the chief economist of NAR, and the president of the Philadelphia Federal Reserve, they have been calling for the Fed to stop the rate hikes. And now that we've gotten to 8% rates, and what Jerome Powell's been saying, which is you might feel the effects of our policies later, I'm clear we'll definitely see that at the next meeting at the end of the month. So if you're a home seller right now and you've got your place to go, you're not as affected by rates as you would be if you don't have a new home to go to. So if it's someone that's maybe downsizing to a property that you already own, maybe you're moving into a rental, you've already secured the new home, you've been working on a property for a year or two, getting it ready and rehabbing it. There's all these things that are happening in the market. And if you have your new home lined up, demand has not pulled back at all. Just this past weekend, we had a new home hit the market. It's got 7 offers in on it in the face of 8% rates. So we're seeing that demand is not softening because inventory is still at that 1 1/3 month supply in the suburbs and at just over 4 months in the city of Philadelphia. And until it gets to really like a 6-month supply, we're not going to see demand taper off as much as it normally would. That's kind of the magic number there. So if you're a seller and you've got your new place lined up, there's some opportunity here. You might also be a high equity seller and have the ability to buy mostly in cash, so the rate may not affect you as much. You might think about a 2-1 buy down if you want to buy a new home and you've got a lot of equity in your current home, because that brings the payment down and that may help you negotiate with a seller. A 2-1 buy down means you get a 2% drop in the rate, so 8 to 6 the first year, and then 1% in the second year, so 8 to 7, and then the rate stays at 8 for the rest of the loan term. So that's just an example. You want to talk to a lender about that. So there are other options out there, and if you're not having those conversations, or better yet, your agent's not having these conversations with you, then there might be a missed opportunity to get the home that you want. Because when buyers pull out of the market, it really puts you in a great position as a purchaser to get the home that you want. The flip side is we're still seeing very low inventory. So for a seller, if you know your plan, selling right now could help you net a great price and get where you want to go. For the buyers that are out there, everyone's in agreement rates are going to come down in the future. The question is, what can you renegotiate if you buy now versus buy later? So you can typically, if market conditions cooperate and we see rates come down, which a lot of people are predicting that they will, you can renegotiate that rate with a refinance. What you can't do is renegotiate the purchase price. And there is absolutely no data that prices are going down. We've seen prices jump up on average throughout the entire greater Philadelphia area close to 5% this year, 4.64%. So about 4 2/3. And that number's not going anywhere because we're still seeing multiple offers. I gave you that case study earlier. We're seeing prices go up. We're seeing lower inventory, and there would have to be a flood of inventory to come to the market for prices to go the other direction. We were going through something very similar in 2020, right after the COVID pandemic, and we were allowed to get back to work and real estate was essential. And what happened there is that the people that waited for the market to calm down or prices to go the other way, they're either still waiting or they missed out on a ton of equity in their home. Home prices are up 49% since 2020, according to Zillow. So the point of all this is, if you're thinking about making a move, there's a lot of confusion in the market right now. I'd be meeting with an agent to have a strategy session. Don't just go look at homes if you're a buyer. Don't just call someone that you see that, like, I want to get into this property, I'm excited to see it. Have a strategy session to understand exactly what all this means so you can make a well-informed decision. Because rates are higher, that's going to stop a lot of people. It's not ideal, I get it. It's also going to create some opportunities if you're looking at the long game, which we know in real estate, the long game typically wins.